Welcome back to Market Day Report. I am Scott Shelley, otherwise known as the Cow Guy. Thank you very much for tuning in if you're just tuning in. And by the way, at 1 o'clock Central, 2 o'clock Eastern, I mean, this has been one heck of a week, folks. You know, I've been doing it 35 years, and you want to tune in, we're going to try to get through it and show, tell you what's really going on, because things are changing, and they're changing faster than a lot of people know. But wanted to get that in there because lots are going on. Let's get to the corn prices, as the producers put it in there to make me stop talking. July is up 1 cent to $7.89 1/4. Look at the high, $8, right? That was pretty good, but we've had crude oil roll over, and that's been a negative for some of these contracts, especially corn. December's still up 2.5 cents. That's the new crop, 737.5. Why don't we move to, say, soybeans? What's going on there? Soybeans down 3.25 cents, 17.06 1/4. And we've got, say, Novi New Crop hanging on to a 2-cent gain, 15.45 1/4. Really, wheat, turn your head now if you're a wheat person, 32.5 cents lower in Chicago wheat. 10.45 3/4 is last. We've got a 29 to 32.5 cent loss going out the deferred. So wheat kind of taking it on the chin in Chicago as well as in Kansas City. Hard red wheat also off about 26 cents here, 26.5 cents across the first 3 months, right? July is off 26.5 cents to 11.22 even. But we've got, say, between a 24 3/4 and a 26.5 sell off all the way out the deferred. So rough board there. How about spring wheat in Kansas City, or no, I mean Minneapolis, 27 3/4 cents lower in Minneapolis. July trades at 11.81 1/4 last. Lost that 12 handle. All three of the fronts lost their 12 handles. 27.5 cents lower in SEP, right behind it, 11.82 even. Let's go see if cotton can hang on to that July gain. It was looking like it was a little weak as we move over to the cotton board. Still up 32 points in that July contract, 143.85, but new crop D's, that's down 114 points to 118.09. Let's bring in our next guest analyst to be Todd Horowitz from Bubba Trading. Todd, thanks for joining the show.
Great to be with you, Scott, as usual.
It looks like
Scott.
Yeah, right. Okay, well, here we go. Todd, it's been a crazy week. It's been a crazy year. And there are a lot of things moving. There are a lot of moving parts. But I would argue this. It looks to me, though, we still do, even though we're getting buffeted by the outside markets, it looks as though we still have a story in the grain markets. What do you think about that?
I think there's a big story in the grain market, Scott. I mean, food shortages, depending on what Mother Nature does. I mean, we've still got Ukraine and Russia going on. There's a lot of big stories that should bring these prices substantially higher. We can watch the little piddly trade go back and forth and get nervous at every tick back and forth. But overall, the demand has got to rise and prices have got to go higher. You're not going to get away with raising interest rates 3/4 of a point, spiraling out of control fuel prices, and not expect the grains to go higher. And that's what I would expect to see. I'd expect to see much higher prices. It's not going to be pretty for the average consumer because, again, where you can get the money from. But overall, they should be going a lot higher and probably will. But you get these little gyrations in markets where it's kind of quiet, there's not a lot of volume, and the markets churn around a little bit.
What do you think about crude oil today?
I think crude's down. I don't have any idea why. I don't. What was the sudden? Is there a reason for the sudden drop? I haven't heard anything, but you never know. I mean, this is they're not going to create more oil for us. This is not going away. And I would argue that we're going to see all-time new highs plus 150, as possibly as high as 200 in crude before it's all done.
Anything really energy-related is going to probably take a hit because of what's happening in crude today. There's any number of reasons why. There's a lot of assets have sold off. You've seen what's happened to Bitcoin. And folks that have been long this, it looks like it was a little bit overweight. I've had to get out of this contract to pay for other margin calls and other ones, which is, a lot of times the case, so not to read too much into anything at any point in time, but there's so much capital that is intertwined in these markets that sometimes happens. So stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Todd Bubba Horowitz after these messages. All right, welcome back to Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. This is a segue into live cattle. Why don't we use that? The Cow Guy, live cattle. You get it? I do too. Well, this is a quiet board. We're only up between 35 and 40 cents across the front 6 or 5 contracts. August is up to 136.70. That's up 40 cents. Deese is up 35 cents to 148.02. When you have a small range and a small change on the day, folks, that means that market has checked out, gone fishing, away for the long holiday. We'll see what's going on Tuesday morning, right? Same with feeder cat a little bit, but it's a little bit better gains. August is up $1.50 to 172.80, and we've got September up $1.25 to 174.47. So this one also better, but still kind of quiet. And then finally, lean hogs. Let's see what's happening in the pigs here. We've got them up to $1.25 higher in July to 110.82, and $1.77 gain right behind it in August to 107.80. All right, let's bring back in our guest analyst, the venerable Todd Horowitz from Bubba Trading, and I think he's in Vegas right now. But anyway, Todd, what do you think about the livestock? Or if there's anything else you want to visit, we can get back after that too.
I'm just getting ready for the cow guy close. I got Friday.
That's right.
In. But look, crude oil's down, meats are higher. I mean, cattle's higher. I think hogs have probably found a range between $1 and $1.20. And I think cattle's going to go the opposite of crude oil pretty much. I don't think that's really changed. I think the protein of choice will be hogs for quite a while here as prices, because again, we seem to forget that they just raised 3/4 of a point. Even though we're seeing some reaction in some of these markets, I think it's obviously going to cost money. And again, farmers, they pay a lot more for money than the average person pays. So that's another problem that we never hear about and nobody ever talks about.
Well, I would call that the synthetic tightening across the board that isn't an interest rate hike, that everybody's paying a lot more on when it comes to your credit cards or your operating loans when you're on the farm, or not just gas at the pump or groceries at the grocery store. So I have to say, to get it off my chest, Todd, I think that we've had historic synthetic tightening, and at the same time the Fed's raising interest rates, which I understand why they are, but I just don't think I would have taken the opportunity to come out and beat my chest and add an extra quarter at a time where I think the economy is weakening severely. But that's just my take, and I know it's not RFD's take. It's just me personally, but that's where I stand on that. But I appreciate you coming on.
It's my take too. I'm with you, Scott.
Now I'm worried. Okay, that's good stuff. Thank you very much for coming on a Friday. That's Todd Horowitz from Vegas. He's with Bubba Trading. Bring it back here from Vegas to Nashville. Kind of Nash Vegas at sometimes with the way Janet goes out, and we'll pass it back over to Janet.